This podcast is brought to you by True Resources, connecting talented people with the best mining employers in the Australian market. For more information, head to trueresources.com.au.
Hello, I'm Ben Kostrich, and this is the Market Bull podcast. Joining me today on the show is Ian Rodgers, the CEO of Jindalee Lithium. Now, I haven't spoken about lithium in quite a few months, and it's quite great to have someone that's been living and breathing the sector for a while now. So welcome to the show, Ian.
Thanks for having me, Ben.
It's the first time I'm speaking with you, and I will allude that I spoke with Lindsay Dudfield, the executive director now, about a year ago, which has a lot more about the origin, the history of the company. So we won't necessarily go through all of that because it's been listed for quite a substantial amount of years. But starting with yourself, I mean, I noticed on your resume, you've been at Rio Tinto about 15 years plus in mining and executive roles, from mergers and acquisitions, capital raisings, a whole host of different aspects. And I just want to get to know a little bit more about what your journey has been. So can you just dive in a little bit deeper as to who you are as a person and what has drawn you so much to the mining world?
Yep. Yeah, thanks, Ben. Look, I'm a Queensland country boy originally. Was drawn to the mining space through affinity for big equipment and whatnot. I started life as a mining engineer, and worked at, as you said, Rio Tinto for a little while, across two major big greenfield mine developments in Australia, coal and iron ore specifically, before sort of graduating into investment merchant banking, where I sort of held senior roles in London and Sydney, on the full suite of mergers, acquisition, capital raising, investing in early stage businesses, but also advising sort of large multinationals. I then sort of wanted to get back into the industry, and I had a number of different corporate roles. The last one being I was projects director at Oz Minerals, particularly looking after some of their studies in Western Australia around West Musgrave, looking at producing battery products, and then also leading the work to bring in a commercial partner into that and develop the broader asset.
So then where did the opportunity or phone call come for Jindalee Lithium? And it's been through a rebrand. That feels like a while ago now, but there must have been some form of interaction that you had that made you go, I'm going to move away from big scale, established companies, not that Jindalee Lithium isn't, but to jump into a smaller team and get a bit more hands-on. How did that whole path and story evolve?
Yeah, for sure. Well, it was sort of, as you be aware, BHP took over Oz Minerals during it closed in 2023, and as part of that process, I was looking for the next opportunity, and really what struck me, I was aware of Lindsay and his sort of reputation, etc., and I got to know the former chairman Justin and Lindsay over a couple of months, and really was drawn to the role. Because just the size of the prize, there's a lot of value to be had there. There's a sort of a mismatch between where I saw the value of the company and the potential of the asset, and I also saw this really interesting intersection of technical projects, but also capital markets, and then this macro theme of decoupling with China and the US government support. So it sort of appealed to me as a sort of really challenging opportunity to help unpick and create value. So that's the sort of genesis.
There's a few threads there, and we will go through a few of them as the conversation goes on. But first and foremost, if no one's ever heard of Jindalee Lithium, how do you best encapsulate what that company is? And you talked about North America just a little bit there, but talk about what the company is.
Yeah, well, as you touched on at the start, Jindalee's been around a long time, 20 plus years. We're a very unique junior mining company. We've only got a very small amount of shares on issue, created a lot of value for shareholders over a number of time. And I encourage people to sort of go back and listen to Lindsay's video that can probably a bit more detail around that. But it's been driven by the project generator model, identifying assets, partnering and creating value in a nutshell. And really the strategy has always been to find the company making asset. The story behind the McDermott is really sort of incredible. We pegged it in 2018. on the eve of, I guess, all this Inflation Reduction Act, and this key theme was quite a foresight shown by the team to peg that. It was dropped while one of our more advanced peers without drilling a hole. We had instant exploration success, built out what is now America's biggest US lithium resource. And so really, we were now a US focused lithium company, and I've got, a confident team in the US, and, the strategy is really about how do we responsibly develop McDermott.
Okay, and McDermott, can we remind listeners about whereabouts in America that is located? I mean, yeah, the scale of it is massive, and we'll go through that. But where is the project located?
Yeah, it's located in the McDermott caldera, which is on the border of Oregon and Nevada. We're mainly in the Oregon component. We're sort of our near neighbours, Lithium Americas, the Thacker Pass project. They're a sort of circa $1 billion company in construction, funded by General Motors and the US government. So we're in the right geography. It's very sort of strategic, really located project. You sort of drive past the Tesla factory to get there. It's sort of on the doorstep to the EV and battery supply chain build out in North America. And our project, I guess we often get compared to WA spodumene peers, but we're quite different. The project, will produce a lithium chemical, lithium carbonate, which will be, used directly in the value chain, as opposed to a dig and ship concentrate model to China. So it's a very different looking project. And it's sort of, to compare like for like, it'd be a spodumene mine plus a concentrator plus a conversion facility. So a Greenbushes and a Kemerton, for example. So it's a very interesting and big project. And yeah, look, we've had a lot of interest with POSCO as an MOU holder. We've done work with them this year under that in Korea. And we're shaping up to be a very interesting project.
Yeah, there's a lot of, even Oracle, a lot of strategy that's been set in the foundation. And if I take a zoom back initially, because lithium, there's been a bit of turbulence to say the least within the market, and I haven't really approached this in a while. So if you're looking back at what's unfolded from the macro sense of lithium, first and foremost, what's really been unfolding with some of the conversations and what's happening with lithium at the moment?
Yeah, good question. I think if you zoom out a bit, we've had a sort of a big price run up in 2022 when particularly refiners in China got caught short on supply, and that led to that price spike led to a lot of high cost production coming into the market, a lot of increased stocks, inventories, I should say, across the supply chain, and then we've seen the results of that over the last 12 months, I guess. Lithium chemical prices coming off from $80 a kilo down to, they're almost approaching, depending on which pricing point you're looking at, they're $11,000 a ton there-ish about, and they seem to be bottoming out around that level. And then we've seen, from a supply response, we've seen, particularly Western producers and developers all announce, not all, lots of examples though of groups, pushing projects sideways or deferring spend or staging it. Some of the headline ones recently are from Arcadium, who put their James Bay Galaxy project basically on ice until they find a partner, and then they've also staged a lot of their spending in their large project in Argentina. Just as an example, there's quite a long list of supply rationalizations that's underway. So that sort of signals where we are in the market. Investor sentiment is well off. Quite a bearish outlook. Some groups are looking counter-cyclically, but I'd say that the industry as a whole at the moment is very capital constrained, and really we're laying the seed to the next boom market. I've been around commodity markets a long time, and I've seen this sort of recipe before. We've got demand growth that's this year, even though despite the headlines, we're going to achieve something in the order of 20% growth in lithium chemicals. It's going to go from $1 million market in 2023 to circa 3 million ton market by the end of the decade. There's a bunch of supply that needs to come on, and there's a broad recognition that the current spot price is well beneath incentive price, which is generally seen in the industry is plus $20 a kilo of lithium chemical. So you can really see the foundations of the next boom cycle being led. The $1 million question clearly is when will that happen? And if I had that, I knew that answer, I'd be a happy man. But it certainly our project is a towards the end of the decade story. We're relatively early in our journey. We've de-risked the project, but we'll be well placed when the market's in deficit.
And does that really encapsulate that it was a bit of a necessity evil? As I remember, every company had a lithium project, and it was hard to really get an understanding of which ones were viable, which ones weren't. And now there's been a bit of a shrink, and the substantial players and the ones that actually can impact on the next bull run are remaining. Is that kind of, in an evil sense, saying what was needed because of how high this ran and that everyone was trying to just peg lithium grounds, and now it's sort of coming back to a reality of, unless you have a decent project with potentially a bit of work done, you're not going to be able to survive in that scene?
Yeah, I think for a supply point of view, yes, there was some response in the Western, the Western world, but there's also a lot of probably what's really killed the price is a lot of the unforeseen supply that's come out of Africa, for example, and shipped to China. I think in terms of which projects go forward, I think this market's clearly rationalised some of that, and we're sort of viewing it as an opportunity to sort of bunker down. If we look at previous cycles, the groups that positioned themselves well was to sort of keep core technical work underway during the keep progressing projects through the bottom of the cycle, pragmatic expand and position themselves for the next run. Clearly, there was frothiness in the market, with exploration players in 2022. But we're sort of, we're now not a greenfields exploration play. We're a development play, and so we're trying to position ourselves well for that next bull run.
And again, you mentioned the scale and size of the McDermott lithium, and if I can drill back in on that pun, talk us through what Jindalee Lithium has done to really show the scale and size of this, and alluding to it, de-risking the project. I know that the PFS is progressing, and it should be coming out towards the back of Q4 of this financial year. Can you elaborate a little bit more about just the scale of this project and what Jindalee has done to develop it?
Yeah, for sure. Well, I guess zoom out a little bit. Middle of last year, we appointed Solar Corporation. They're obviously a large international blue chip engineering firm, but particularly they've got a lot of experience in lithium, sedimentary lithium clay style deposits. They're the lead engineer for Ioneer's White Ridge. They've been involved in with America's Packer Pass project, which I mentioned is next door to us. And so they about 12 months ago, helped shape our thinking on the flow sheet, and we then appointed them as lead engineer as part of that, managing a test work program. And so from let's say Q3 last year, we've kicked off engineering studies on the PFS, but really importantly, we've commenced a test work program and completed it from basically the start to finish on our flow sheet. And so the flow sheet would be less familiar to Aussie investors, but like I said, very similar to what the guys next door are doing in Thacker Pass. Essentially, the McDermott deposit, very large, laterally extensive, basically at surface mineralization, free dig material, so very cheap mining costs. But the processing, basically, you dig it up. It's then sort of washed in a beneficiation process where they screen out the sand and then keep the clay fragment, which contains most of the lithium, and that is I guess acid leached and then purified through a number of different steps into lithium chemicals. And so it's a less complex, less intense process, energy intense process compared to say spodumene. And we've now we've tested everything from beneficiation. Those results were out end of last year. Acid leaching results were out in January, and then the last step was to actually produce a battery grade lithium carbonate, which we did in July, which was a huge technical milestone, albeit it's done at the bench scale. That supports a very robust PFS. And in terms of the scale, I mean, one of the challenges we've had is that our scoping study that we did a couple of years ago was done on a different flow sheet, and we've sort of learned through that process and with the help of Phil to guide us to the direction we're heading now. And, so there's not a broad understanding of, the parameters of this project, but, we expect the PFS, which is due out Q4, to really, define a large scale competitive source of lithium chemicals over half a century or more. So it's a really big strategic asset. And I think people will be surprised by just the scale and life that this asset can drive.
And do you feel, again, you talked about being an Australian listed company that's got a project in North America, that there's that bit of that disconnect about understanding the scale and almost the, neurology, but not to other mines as well as Thacker Pass, but automotive manufacturers, like having Tesla mega factories around the corner has got to be a massive indicator of, well, they're not really going to set up and pack down any time soon, you'd hope. The neurology and all of that, do you feel that there's a bit of a misunderstanding or almost a disconnect that investors in Australia just don't potentially quite understand that relevance, given that we just see a lot of Australian projects?
Yeah, I think there is a bit of a disconnect. Certainly, through my conversations with Australian investors, and then going to talk to strategics and the US government, etc. There's a general theme from those from the US government, for example, that this project needs to happen. There's a lot of, we're getting support from a lot of quarters. I think there's still obviously some headwinds in the lithium space in the US investment space. It's not to say that, but I think there's a much better understanding of this decoupling of critical minerals, that it's a bipartisan, really bipartisan sort of theme that both sides of the aisle are pushing for. There's a lot of support to do that, and that whole supply chain build out. So I think they get that certainly a lot more than Australian investors do, who are more focused on, I guess in the lithium space, looking at projects that are, smaller scale, lower capital intensity, quicker to market. So there is definitely that difference, and there's a sort of we recently brought on a US institutional investor, and the key thing there was just the mismatch, between there's sort of an asymmetry in, yes, we're cheap by any metric, but there's some real upside there if we can unlock the key value steps.
And speaking of conversations with US government, I remembered Lindsay was talking about some of the conversations progressing because of its importance for the US and the lithium space. Can you elaborate a bit more about how those conversations progressing and which groups? Because the Inflation Reduction Act, if some and most are familiar with it, it's a massive allotment of money going towards critical materials from the US government. And Jindalee is positioned already having conversations with federal, local and state governments about funding. And not to mention, I don't know if there is conversations with military side of it as well, which has also got a decent amount of funding. How are some of those conversations going, and who are sort of the people that you're speaking with, if you're allowed to tell us?
Yeah, I mean, we've got sort of specialist advisors in place to help us on engaging with the different levels of the US government. I think people, I guess, characterize it as Inflation Reduction Act. There's actually more legislation in that. That's always the key pieces of it. There's also, bipartisan infrastructure law and a bunch of other bits that drive investment in the critical minerals space. I think, there's a couple of, I guess, if you look from a bigger picture, before I dial down to what we're doing, is that there's a lot of for domestic projects under the Inflation Reduction Act. There's particularly ones that are produce, say battery grade lithium carbonate, for example. There's significant tax credits, like in the order of, say, 10% of your operating costs, that make a huge difference to the economics of your project. There's a bunch of different loan programs through the Department of Energy, the Loan Programs Office. There's the US Exim Bank, which is I guess their export credit agency, but really incentivized to stimulate jobs internally. So there's these big pools of money. Those sort of debt lines, generally for construction. If you look at examples around that, it's just unheard of in mining development. It's like time loan money is sort of 25 years plus treasury rates. So cheaper than I can borrow money in Australia to build a house. So really juices returns for those equity investors in these projects. But then there's for early stage stuff. There's a range of different grant funding, both through the Department of Energy and the Department of Defence, and that's where our focus has really been. We put out an announcement earlier this year around some applications we have there. We hope to get some clarity around those in the second half of this year. There's sort of two applications afoot, both been through different phases. We're supported by local politicians and potential partners at the like. The Department of Defence one is can't disclose now the application, but it's basically co-fund the from where we are now to an FID decision, feasibility study, drill program, metallurgical test work, and so that would sort of materially co-fund us through to a final investment decision in a couple of years' time. And so that's the Department of Defence one. That's the one I guess we're most excited about. And then there's a much larger one through the Department of Energy, which is really geared towards demonstration scale test work or even early construction work on the project down the track, which is for a much larger sum of money. But we're progressing both of those and hope to have at least some update toward the end of this year.
And simultaneously, there's those conversations going on, and you have the MOU, memorandum of understanding with POSCO, and that's about the battery side of it. How are those conversations? Have you got other EV companies getting interested? I mean, what are the conversations of potentially that downstream, which is a long way away, but how are those conversations progressing as well?
Yeah, I think we've obviously signed an MOU with POSCO in 2023, and then we've done work this year with them in Korea. And essentially, it's a collaboration agreement. They're keen to see the results of our pre-feasibility study, and they're obviously sharing the works of their test work. But it's really a collaboration agreement. And then we sit down to decide what's next. There certainly has been, other groups that express interest, and I think the key theme again has been that the PFS is key to sort of define what the project parameters are and what the potential is, and then just sit down and talk about what partnerships might look like. Certainly, our strategy is sort of underpinned by the US government support, which I sort of touched on, and then this partnership side really, we plan to run a process post the PFS. I talked to bring in a partner, as part of the next stage through feasibility, etc., to really help shape the project, because it is such a big project. It's going to produce, like I said, lithium chemicals, so it really needs to be plugged into the supply chain. It's not a bulk commodity like copper concentrate or iron ore that you can readily trade. And so bringing that partner or partners in that have the right technical commercial skill set is going to be key. And we hope to sort of convert some of those conversations after we put the study out later this year.
And is everything still on track for a Q4 PFS? All things going to plan? As you alluded to there's quite a few things that come next, but do you feel that is going to be a big sort of tick naturally from the company having achieved that and bring a bit more attention back to Jindalee Lithium, given that what's happening in the market at the moment, seeing the size of and seeing the results of the PFS might again change people's tones and excitement about the company as well?
Yeah, I think it'll definitely change a lot of the conversations with potential strategic partners. I think the general investor universe is going to be driven by the macro more than our study. I think it'll obviously help demonstrate and de-risk the project and a lot of the potential there. But it'll be a major milestone for us, and really we'll be able to enable us to sort of launch into the next phase through this partnership, and hopefully at the same time locking down some of this US government support.
So there's a fair bit going forward, and you've come on board on the team as of January, but there's a few others that have been around you, and you said you've heard of Lindsay's name for quite a few years. Who else is a part of the leadership and arguably the boots on the ground team that's working on bringing this project and putting all these steps in place for Jindalee Lithium?
Yeah. I mean, Jindalee's got a pretty high caliber board management, particularly given the size of the company now, which I think speaks to the value that we see in the company. Around the same time as me joining, Wayne Zeklich joined as chair. Excuse me. He's experienced finance, CFO, investment banker. He's the chair of Pantoro. I'm sure the listeners are familiar with a significant WA gold producer, and was previously Deutsche Bank's rep in Western Australia. So he's had a lot of experience financing big projects, and brought a wealth of experience. In terms of boots on the ground in the US, our key person over there, Brett Marsh, has a wealth of experience through the project lifestyle cycle. We're in the process of building out the US team, with a focus on permitting and community engagement, and we'll continue to sort of build the team out as we move through into next year and get through some of these major milestones. But we've got a really high quality team, led by Brett in the US, and we've been able to demonstrate that we can operate over there effectively.
Okay.
In terms of the
sorry, you go.
Yeah, sorry. I was going to say the rest of the board. I mean, we've got a very well credentialed board. We've got Paul Brown, who used to be one of the few people that have actually lithium operational experience. He used to be CEO of McDermott's lithium business. He's now CEO of Core Lithium. And then Darren is a corporate lawyer that's been around the lithium space with Near Metals and others for a long period of time. So we've got a pretty high caliber team around this.
Yeah, and the other point is that the shares and the capital structure is quite tightly held. I remember that from the conversation with Lindsay again, was that the shares on issues, and you mentioned it, it's very tightly held so that it isn't diluted a lot for shareholders. And talk us through why the company's been so focused on keeping that accessibility of shares so reduced so that you don't, well, I'm not putting words in your mouth, but what were the reasons, and why does the company continue to do that in such a market where people are almost cutting off arms and legs to keep companies alive in a sense?
Yeah, I mean, at the heart of Jindalee strategy over time has been just a good steward of capital. Lindsay's the biggest shareholder, 25%. And as I mentioned, the reason it's tight is because we're self-funded through asset sales or other transactions, through success executing on our strategy. We haven't had to tap equity markets, so we don't have billions of shares on issue as some of our peers do. Or had to raise relatively small amounts of money, and that sort of cuts both ways. Though I think we've got a very tightly held and loyal shareholder base. We're very pleased. We just closed an entitlement offer and was well supported by our existing shareholders. But it sort of cuts both ways. On the up, it's well because it's tight. It's tightly held, and there's not very many shares on issue, so less dilution for shareholders. But so it provides lots of leverage on the way up, but equally on the way down, it's very tightly held, and so we've traded down on materially on a couple $100 worth of stock. So it sort of cuts both ways, but it's sort of fundamental to our ethos in terms of trying to protect existing shareholders, given we are shareholders in the business, and position ourselves for the long term.
Yeah, it's fascinating. And the project generator, I know that Jindalee Lithium has spun out previous assets and companies in the past, and that's also part of the generation of wealth model, is that there's still decent ownerships in a few different companies that have been spun out. And that's another fascinating bit that I think some people don't necessarily see as soon as they look at Jindalee Lithium, but that's another thing, is the exposure. Is that something that is still talked about relatively a lot, or again, is it just something that if you know the company and you know of it, you understand that there's exposure to other resources through the spin out ventures as well?
Yeah, I think it's broadly understood, but I think, just to I guess demonstrate that, I guess our model is that we spun out the Australian assets to focus on our US projects. I think that was completed 23, and so that created a company called Dynamic Metals. We're 25% shareholder in them, and that's led by Karen, and they've gone on and done great things. They've got a partnership with MinRes on some of the tenements in Western Australia, so it's really sort of validates our model. We've sort of set them free, and they've created value, and we're progressing the path on McDermott and our shareholders sort of still get a good a good amount of exposure to that.
And that's what I wanted to hear, because I keep hearing this, and it's consistent, and it's clearly been the case for over 20 years within the company. And over the next handful of 20 years, but more so the next 12 months, what can investors really expect coming from Jindalee Lithium as you accelerate quite quickly towards this PFS, which I assume is going to be one of the staples of that next 12 months? But what's on the horizon for the company?
Yeah, I guess we've just come through a bit of a quiet patch where we've been delivering the PFS. We've just put out our test work over the next 6 months. We expect to announce the PFS. We expect to provide an update on some of this grant funding opportunities. They're probably the most material ones, but also, we're looking, what we haven't touched on is we're sort of in advanced discussions with US government agencies on a technical cooperation style agreement, which we hope to, be able to announce sometime in the second half of the year, which we think will be really, really important. We're also, like I mentioned earlier, spending a lot of effort and time engaging with local communities, and we expect some agreements to become forthcoming in the second half of that year as well, which to sort of demonstrate, that we're starting to get buy-in from different groups. So, lots to look forward to.
And I always encapsulate these conversations with key takeaways. I find that it's the best way to remember points, especially from the people that are leading the company. If there are certain key takeaways that you would urge investors and listeners to remember about Jindalee Lithium from the past, the present, and the future, what would some of those key takeaways be for listeners?
Yeah, look, I'd say, Jindalee's got a track record of, being good stewards of capital, responsible investors. McDermott, obviously, large scale strategic asset. We're trading at extremely low valuations by any metric. In the next 6 to 12 months promise, significant value catalyst. So we really see, not to repeat myself, but sort of in an asymmetric risk profile here really is that the valuation is already pretty well depressed. If we can, demonstrate that we're de-risking the project, there's potentially there for a big re-rate over the next 6, 12, 24 months. So we're I'd encourage investors to sort of look at it through that lens.
Fantastic. And listeners that are wanting to reach out, follow, engage with the company, where can they go to ask questions or just keep a track of all the news flow that's going to be coming out?
Yeah, I'd encourage investors to go have a look at our Investor Hub on our webpage. You can ask comments on any announcements, and it'll be directly answered by management. You can email us through the website. We're also quite active on the socials, etc. And really I'm happy to keep an open dialogue with shareholders and potential investors.
Yeah, I will urge investors and listeners just to go check out the website. It's a fantastically built one. It's relatively new as well, but the interactive aspect of the Investor Hub is quite forward thinking, and it allows people to ask questions quite openly and transparently. And as you said, management gets back quite quickly, which is good to see. I saw a few comments on a few of the announcements. So, yeah, thank you, Ian, for speaking on the show. There's a lot evolving in the lithium space, and as you said, it's priming Jindalee Lithium for that next inevitable bull run. As the electric vehicles, they're growing everywhere, but just batteries and the use of them. So it's been a fascinating conversation. I look forward to speaking with you again on the future as you tick off this box of PFS and all the next exciting discussions and announcements that come forth. So thank you so much.
No dramas, Ben. Thanks for having me. Really appreciate it.
Thanks for listening to the Market Bull podcast. Please remember that the topics and stocks discussed in this podcast are not financial advice. If you enjoyed this episode, please make sure to like, share, and follow. You can follow the Market Bull on all our socials and keep up to date with global market insights.